Determining an appropriate selling price for a company's goods or services is an extremely important function in business. Let's take a look. The price must be attractive to potential customers yet sufficient to cover expenses and provide the company with a reasonable profit. In business, expenses are separated into two major categories. The first is the cost of goods sold. To a manufacturer, this expense would be the cost of production. To a wholesaler or retailer, the expense is the price paid to a manufacturer or distributor for merchandise. The second category includes all other expenses required to operate the business, such as salaries, rent, utilities, taxes, insurance, advertising, and maintenance. These expenses are known as operating expenses, overhead expenses, or simply overhead. The amount added to the cost of an item to cover the operating expenses and profit is known as the markup, markon, or margin. It's the difference between the cost and the selling price of an item. Markup is applied at all levels of the marketing channels of distribution. The formula that describes this principle is known as the retailing equation. The equation states that the selling price of an item is equal to the cost plus the markup. Using the abbreviation C for cost, M for markup, and SP for selling price, the formula is written as selling price equals cost plus markup, or SP equals C plus M. To illustrate, if a camera costs a retailer $60 and a $50 markup is added to cover operating expenses and profit, the selling price of the camera would be $110. Equations are solved by isolating unknowns. So, what amount of the markup is the unknown? The equation can be written as markup equals selling price minus cost, or M equals SP minus C. When the cost is the unknown, the equation becomes cost equals selling price minus markup, or C equals SP minus M. Here's an example. Memento's gift shop pays $8 for a picture frame. If a markup of $6.50 is added, what is the selling price of the frame? Because the selling price is the unknown variable, we use the formula SP equals C plus M. So that means $8 plus $6.50 equals a total selling price of $14.50. Here's another example. Reliable Office Supply buys printing calculators from Taiwan for $22.50 each. If they're sold for $39.95, what is the amount of the markup? Because the markup is the unknown variable, we'll use the formula M equals SP minus C, or $39.95 minus $22.50 equals a total markup of $17.45. One more example. Safeway supermarkets sell corn crunchies for $3.29 per box. If the markup on this item is $2.12, how much did the store pay for the cereal? Because the cost is the unknown variable in this problem, we use the formula C equals SP minus M, which means we take $3.29, the selling price, minus $2.12, the markup, to equal a total cost of $1.17. There are two ways of representing markup as a percent, based on cost and based on selling price. Manufacturers and most wholesalers use cost as the base in calculating the percent markup because cost figures are readily available to them. When markup is based on cost, the cost is 100%, and the markup is expressed as a percent of the cost. Retailers, however, use selling price figures as the base of most calculations, including percent markup. In retailing, the selling price represents 100%, and the markup is expressed as a percent of that selling price. Remember the percentage formula portion equals rate times base. To review these variables, portion is a part of the whole amount, base is the whole amount, and rate as a percent describes what the portion is of the base. When we calculate markup as a percent, we're actually solving a rate problem using the rate formula, rate equals portion divided by base. When the markup is based on cost, the percent of markup is the rate. The dollar amount of markup is the portion, and the cost, representing 100%, is the base. The answer will describe what percent of the markup is of the cost. Therefore, it's called percent markup based on cost. We use the formula percent markup based on cost equals markup over cost. Here's an example of calculating percent markup based on cost. Blanco Industries produces stainless steel sinks at the cost of $56 each. If the sinks are sold to distributors for $89.60 each, find the amount of markup and the percent markup based on cost. Step 1. Calculate the markup. Markup equals selling price minus cost, or $89.60 minus $56 equals $33.60. Next, calculate the percent markup based on cost. So the percent markup based on cost equals the $33.60 divided by $56 to equal 0.6 or 60%. A shortcut for calculating the factors of the retailing equation is to use the markup table. The cells represent cost, markup, and selling price in both dollars and percents, as you see here. Fill in the giving information using 100% for the base and X for this unknown. And now we'll calculate the figure for the remaining cell in the column without the X, and then we form a box. You'll see it here. Now we can solve the proportion for X by cross-multiplying the corner figures of the box. Here it is. When the markup is based on cost, the cost equals 100% and the selling price equals 100% plus the percent markup. If, for example, the percent markup is 30%, then selling price equals cost plus markup, or 100% plus 30% to equal 130% of the cost. We multiply the cost by 100% plus the percent of markup, so selling price equals cost, 100% plus the percent markup based on cost. Here's an example. A wallet costs $50 to produce. If the manufacturer wants a 70% markup based on cost, what should the selling price of the wallet be? Multiply the cost by 100% plus the percent markup. You'll see it here. In this case, we take 50 times 100% plus 70%, which equals 50 times 1.7 to equal a selling price of $85. Fill in the given information using 100% for the base and X for its unknown using the markup table as you see here. With this option, you can calculate the figure for the remaining cell in the column without the X, then form a box. Solve the proportion for X by cross-multiplying the corner figures in the box. So 100X equals 50 times 170, so X equals 85. To calculate cost when selling price and percent markup on cost are known, let's use our knowledge of solving equations. Because we're dealing with the same three variables, simply solve the equation SP equals C times 100% plus percent markup based on cost for the cost. Cost, the unknown, is isolated on one side of the equation by dividing both sides by 100% plus percent markup. So cost equals selling price divided by 100% plus percent markup. Let's take a look at an example. American Eagle sells a blouse for $66. If a 50% markup based on cost is used, what is the cost of the blouse? Solve for the equation cost equals selling price over 100% plus percent markup based on cost. So cost equals 66 over 100% plus 50%, or 66 over 150%, which equals 66 over 1.5 to give us a cost of $44. We can also use a table to complete this example. Fill in the given information using 100% for the base and X for its unknown. Calculate the figure for the remaining cell in the column without the X, then form a box. Solve for the proportion of x by cross-multiplying the corner figures in the box. 150x equals 66 times 100. So x equals 6,600 over 150, which equals $44. The calculation of percent markup based on selling price is the same as that for percent markup based on cost, except for the base, the denominator, changes from cost to selling price. Remember, finding percent markup is a rate problem using the now familiar percentage formula rate equals portion over base. For this application, the percent markup based on selling price is the rate, the amount of the markup is the portion, and the selling price is the base. So percent markup of selling price equals markup, the portion, over selling price, the base. Here's an example. Quality Hardware and Garden Supply purchases electric drills for $60 each. If it sells the drills for $125, what is the amount of markup and what is the percent markup based on selling price? Calculate the amount of the markup using M equals SP minus C. So M equals 125 minus 60, which equals a markup of $65. Calculate the percent markup based on selling price. Percent markup based on selling price equals M over SP, so that's 65 over 125, which gives us a percent markup based on selling price of 52%. We can also use a table to fill in the given information using 100% for the base and X for its unknown. Calculate the figure for the remaining cell in the column without the X, then form a box. Solve for the proportion for x by cross-multiplying the corner figures in the box. In this case, 125x equals 65 times 100. So x equals 6,500 over 125, which equals 52%. This means the percent cost plus the percent markup must equal 100%. If, for example, the markup is 25% of the selling price, the cost must be 75% of the selling price, because cost plus markup equals selling price, so 75% plus 25% equals 100%. Because the percent markup is known, the percent cost will always be the complement, or percent cost equals 100% minus the percent markup based on selling price. Because the selling price is the base, we can solve for the selling price by using the percentage formula where the cost is the portion and the percent cost is the rate. So selling price equals cost over 100% minus percent markup on selling price. Let's take a look at an example. High Point Furniture purchases wall units from a manufacturer for $550. If the store marks up all merchandise 60% based on selling price, what is the retail selling price of the wall units? Solve for the selling price using the formula. So in this case, selling price equals 550 over 100 minus 60, or 550 over 40%, which equals 1,375. So our selling price is $1,375. We can also use the table to fill in the given information using 100% for the base and X for its unknown. Calculate the figure for the remaining cell in the column without the X, then form a box. Solve the proportion for X by cross-multiplying the corner figures in the box. In this case, 40x equals 550 times 100. So x equals 55,000 over 40, which equals $1,375. To solve for cost, we must isolate cost on one side of the equation by multiplying both sides of the equation by 100% minus percent markup. This yields the equation for cost. Cost equals selling price times 100% minus percent markup on selling price, or C equals SP times 100% minus percent markup based on selling price. The percent markup on cost is always greater than the corresponding percent markup on selling price, because markup on cost uses cost as the base, which is less than the selling price. In the percentage formula, the lower the base, the greater the rate. Here's an example. A buyer for a chain of boutiques is looking for a line of dresses to retail for $120. If a 40% markup based on selling price is the objective, what is the most the buyer can pay for these dresses and still get the intended markup? Step 1. Solve for cost using the formula. C equals 120 times 100% minus 40%, or 120 times 0.6 equals 72. So our cost is $72. You can also use a table to fill in the given information using 100% for the base and X for the unknown, as you see here. Calculate the figure for the remaining cell in the column without the X, then form a box. Solve the proportion for X by cross-multiplying the corner figures in the box. So 100X equals 120 times 60, and X equals 7200 over 100, which equals $72. When percent markup is based on cost, it can be converted to percent markup based on selling price by using the following formula. Use this formula. Percent markup based on selling price is equal to percent markup based on cost over 100% plus percent markup based on cost. Here's an example. If a purse is marked up 60% based on cost, what is the corresponding percent markup based on selling price? Solve for the following formula. Percent markup based on selling price equals 60% over 100% plus 60%, or 0.6 over 1.6, which is equal to 0.375. So percent markup based on selling price is 37.5%. As before, fill in the given information using 100% for the base and X for the unknown in the following table. Calculate the figure for the remaining cell in the column without the X. Form a proportion and solve for X. 160X equals 60 times 100, so X equals 6,000 over 160, which equals 37.5%. Here's another example. At Walmart, a Panasonic sound system is marked up 25% based on selling price. What is the corresponding percent markup based on cost? Solve using the formula. Percent markup based on selling price equals 25% over 100% plus 25%, or 0.25 over 1.25, which is equal to 0.333. So our percent markup based on selling price is 33.3%. As we've done before, fill in the given information using 100% for the base and X for its unknown. Calculate the figure for the remaining cell in the column without the X. Now we form a proportion and solve for X. 75X equals 25 times 100, so X equals 2500 over 75, or 33.3%. A price reduction from the original selling price of merchandise is known as a markdown. Markdowns are frequently used in retailing because of errors in initial pricing or merchandise selection. For example, the original price may have been set too high, or the buyer ordered the wrong styles, sizes, or quantities of merchandise. Most markdowns should not be regarded as losses, but as sales promotion opportunities used to increase sales and profits. When a sale has been concluded, raising prices back to the original selling price is known as a markdown cancellation. A markdown is a reduction from the original selling price of an item to a new sales price. To determine the amount of a markdown, we use the following formula. Markdown equals original selling price minus sales price. For example, if a sweater was originally marked at $89.95 and then was sale priced at $59.95, the amount of markdown would be $30. To find a markdown percent, we use the percentage formula, where the markdown percent is the rate, the amount of the markdown is the portion, and the original selling price is the base. Markdown percent equals markdown over original selling price. Let's take a look at an example. A blender that originally sold for $60 was marked down and sold for $48. What is the amount of the markdown and the markdown percent? Step 1. Determine the markdown using the formula. Markdown, in this case, equals $60 minus $48 for a total of $12 in markdown. Determine the markdown percent by using the formula. So markdown percent equals 12 over 60 or 0.2, giving us a 20% markdown. Note that markdown percent calculations are an application of a rate of decrease. In the percentage formula, the markdown portion represents the amount of decrease and the original selling price, the base, represents the original amount. In markdown calculations, the original selling price is the base, or 100%. After a markdown is subtracted from that price, the new price represents 100% minus markdown percent of the original price. For example, if a chair is marked down 30%, the sale price would be 70%, which is 100 minus 30% of the original price. To find the new sale price after a markdown, we use the familiar percentage formula. Portion equals rate times base, where the sale price is the portion, the original price is the base, and the 100% minus markdown percent is the rate. So sale price equals original selling price times 100% minus markdown percent. Here's an example. Ferrando's Hideaway, a men's clothing store, originally sold a line of ties for $55 each. If the manager decides to mark them down 40% for a clearance sale, what is the sale price of the tie? Remember, if the markdown is 40%, the sale price must be 60%, 100 minus 40% of the original price. Sale price equals $55 times 100% minus 40%, or 55 times 0.6, which equals a sale price of $33. The original selling price is isolated to one side by dividing both sides of the equation by 100% minus markdown percent. This is actually the percentage formula with the original selling price as the base. Original selling price equals sale price over 100% minus markdown price. Here's an example. What was the original selling price of a backpack at Walmart that is currently on sale for $99 after a 25% markdown? Solve the equation. Original selling price equals 99 over 100 minus 25%, or 99 divided by 0.75, to give us an original selling price of $132. Seasonal goods such as men's and women's fashion items, snow shovels, bathing suits, and holiday merchandise may undergo many markups and markdowns during their selling season. Merchants must occasionally adjust prices as the season progresses. Getting caught with an excessive amount of out-of-season inventory can ruin an otherwise bright profit picture. Let's take a look at an example. In March, Swim and Sport purchased designer bathing suits for $50 each. The markup was 60% based on selling price. In May, the shop took a 25% markdown by having a sale. After 3 weeks, the sale was over and all merchandise was marked up 15%. By July, many of the bathing suits were still in stock, so the shop took a 30% markdown to stimulate sales. At the end of August, the balance of the bathing suits were put on clearance in terms of sale with a final markdown of 25%. Compute the intermediate prices and the final selling price of the bathing suits, round to the nearest cent. When solving a series of markups and markdowns, remember that each should be based on the previous selling price. Use the formulas presented to take each step once at a time. Find the original selling price with markup based on selling price. In this case, selling price equals cost over 100% minus percent markup, which equals 50 over 100 minus 60%, or 50 over 0.4, to give us a $125 selling price. Calculate a 25% markdown in May. Remember, sales price equals the original selling price times 100% minus the markdown percent. So sale price equals 125 times 100% minus 25, or 125 times 0.75, to give us a $93.75 sale price. Calculate an after-sale 15% markup. Remember, selling price equals the sale price times 100% minus markdown price. So selling price equals $93.75 times 100 plus 15%, or $93.75 times 1.15 to give us $107.81 selling price. Calculate a 30% July markdown. Sales price equals the previous selling price times 100% minus the markdown percent. So our sale price equals $107.81 times 100% minus 30%, or 107.81 times 0.7 to give us a $75.47 sale price. Calculate the final 25% markdown. In this case, the sale price will equal $75.47 times 100 minus 25%, or $75.47 times 0.75, for a total of a $56.60 sale price. Perishable goods are products that have a certain shelf life and then have no value at all, such as fruits, vegetables, flowers, and dairy. For sellers of this type of merchandise to achieve their intended markups, the selling price must be based on the quantity of products sold at the original price. The quantity sold is calculated as total items less spoilage. For example, if a tomato vendor anticipates a 20% spoilage rate, the selling price of the tomatoes should be calculated based on 80% of the original stock. To calculate the selling price of perishables, use the following formula. Selling price of perishables equals total expected selling price over total quantity minus anticipated spoilage. Let's take a look at an example. The farmer's market buys 1,500 pounds of fresh bananas at a cost of 60 cents per pound. If a 15% spoilage rate is anticipated, at what price per pound should the bananas be sold to achieve a 50% markup based on selling price? Let's round to the nearest cent. Step 1. Find the total expected selling price by applying the selling price formula. SP equals cost over 100% minus percent markup based on selling price. In this case, that's equal to 900 over 100% minus 50%, or 900 over 0.5, equaling 1,800. That means our selling price is $1,800. To find the amount of anticipated spoilage, use the formula anticipated spoilage equals total quantity times spoilage rate. So our anticipated spoilage is 1,500 times 15%, or 1,500 times 0.15, to equal 225 pounds. Step 3. Calculate the selling price of perishables. The selling price of perishables in this case equals 1,800 over 1,500 minus 225, or 1,800 over 1,275, for a total of $14.14 per pound in terms of selling price of perishables.